The market right now on track for its fifth consecutive months of gains. Joining us right now to talk about it is Stephanie Link. She's chief investment strategist and portfolio manager for Hightower. And Stephanie, I don't know if you heard in the last block, but we were talking a little bit about Raphael Bostic saying at this point he only sees one Fed rate cut this year coming up. I don't think you think it matters all that much what the Fed does because you are paying attention to the underlying economy.
Yeah, exactly right, Becky. The numbers last week, or the commentary last week from the Fed, basically adjusting GDP higher was a very good sign. We've been talking about the resiliency of the economy for such a long time. So it's nice they're finally realizing that. They also made progress in terms of on the inflation front, and we have seen that. We're down from 9% inflation to about 3%. We still have a little ways to go, but the underlying fundamentals of the economy are strong. And I don't think it matters if they do one cut, two cuts, three cuts. Maybe they don't even do any cuts this year. But the point being is that the economy can handle where we are at the moment, and that bodes well for earnings, and that bodes well for stocks. And most importantly, it bodes well for a broadening out. I was looking at a variety of different sectors this morning. You know, technology year to date is up 9%. But if you look at energy, industrials, and financials, they're up 10% year to date. And so the market is broadening. We've had fits and starts with the broadening out, and then it narrows and that sort of thing. But I am very encouraged by this broadening out because it speaks to stronger earnings across the spectrum.
The basic underlying economy, what that means, I mean, you just bought shares of DR Horton this week. Is that part of why you're doing this? I think housing is your favorite sector.
Yeah, well, we've talked about Home Depot, we've talked about Masco, Sherwin-Williams. Those are all names that I like. DR Horton is actually the cheapest of them all. It's only trading at 11 times. Historically, it's at 13 times. And I think all the data last week that caught my eye was the housing data. If you look at housing starts, they rose 10.7% month over month, and they were revised higher for the prior 2 months. Single-family homes were up 11.6% month over month. And the most important number, the permits, because that is leading indicator. You're running up permits almost 30% higher from a year ago level. So that's really encouraging. And of course, we also got good home sales as well. Cash buyers are up 28%. First-time buyers are up 25%. So I look at all these numbers and how do you not be bullish on the housing sector? And with DR Horton, seasonally, this is the time when you want to own it and other home builders because you see orders inflect from this quarter versus last quarter as much as 50%. And why I like DR Horton is because they do cater to that first home buyer and in the Southeast markets, which are really quite strong.
We were just talking about how Goldman Sachs is reiterating its year-end target for the S&P 500, but they do have the analysts led by David Kostin who say that what you could see is there's a chance for the mega cap tech stocks to really take the index much higher, up about 15% between now and the end of the year. We have been looking, though, at some of those big tech stocks that have really been struggling. Apple's down 6% over the last month. You had the DOJ bring its case finally last week that we'd been hearing rumors about. I mean, that's a really big potential overhang, and there are people questioning if that could do to Apple what the DOJ did to Microsoft several decades ago.
Well, I think there's a lot that we still don't know, and I think it's going to take a very long time before we get any resolution. If you go back to Google and their DOJ case, it's going to be a 6-year situation by the time we get some sort of a reconciliation there. You look at even Apple with their ebooks issue, it took 4 years to get to a resolution. Microsoft, 3 years. So I think you're going to be, we'll be talking about this for a while, but I don't think we're going to get any kind of firm indication for quite some time. In the meantime, the stock is down 14% from its highs. And I think the April quarter has been de-risked because they already lowered numbers, as you recall. I think you're going to get a new buyback program announced as well during the April quarter of about $90 billion, maybe a little bit higher. And then, of course, you've got the AI meetings, WWDC in June. And I think it's very interesting that they've been doing M&A in A&I, and they shut down cars so that they can actually basically use that $1 billion that they've been spending on the car market back into AI. And so that's one of the reasons, all of these reasons actually are reasons why I've been recently adding to the position, because I do think long term this is going to be just fine.
You've owned it for a while.
I have, Becky, but yeah. Well, you know what? I've owned it for a while, but it was a very, very small position. It was only 1%. At one point last year, it got to 7% of the benchmark. So I was underweight quite a bit. Now I'm about 500 basis points overall in the position. And so it's much bigger. I feel like it's really out of favor at this point as well, for obvious reasons. But I think that's your opportunity.